Price of housing keeps an upward trend. It's seen across the country and right here in Kansas.
Data from realtors of South Central Kansas show while home sales slowed last month, the average sale price is up 7.5% year over year. Again, Sean Logging has a look at the impact of the hot housing market felt by more than just those buying and selling. Sean?
Like Rachel, the conditions continue to be very favorable to sellers as demand remains strong from buyers. After 3 years of a very active housing market, realtors of South Central Kansas is seeing inventory increasing and prices holding strong. It's been said many times.
It is an interesting 36 months looking in the rearview mirror.
The housing market has been quite the ride. Braden McCurdy with McCurdy Real Estate and Auction and president of Realtors of South Central Kansas says even with higher interest rates, buyers are not shying away.
We are seeing inventory coming back up finally. We had gotten as tight as 0.6 months supply of inventory, and then today we're sitting at 1.9 months supply of inventory. Again, with a balanced market being in the 5 to 6 range.
While there has been a slight decrease in the number of sales, the prices for homes keep going up. Braden says it's forecasted to be about 4.2% appreciation rate this year, which is a slower rate than what's been seen recently.
But values continue to hold and continue to slowly appreciate. A little bit more pre-COVID appreciation rates now.
The factors creating an active housing market also part of the calculation by the county appraiser's office. For 2023, most Sedgwick County homeowners saw a 10% increase in their home's appraised value.
At high inflation, and that pushed prices up naturally. You have a tight supply, and when you have all of that happening, appraised values will increase, and they did.
Kansas lawmakers are considering a constitutional amendment to cap valuation increases to 4% a year with exemptions, including for new construction and remodeling. Mark says while it might sound good, it comes with drawbacks. He says it might discourage people from making property improvements. Also, it doesn't take into consideration if there's a downturn in the market.
We're going to still be putting that 4% on, and maybe the market has dropped 20%, and people are going to be really angry.
Says another concern is FEMA reimbursement after disaster. That is based on the official appraised value. He tells me a cap would lead to artificial values, so it could mean that people are reimbursed less than what their property is worth. This is one topic Mark discussed with county commissioners last week as part of a larger presentation.